Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's April 2nd. This will be our chart lesson for the day, and it really was all downhill today. It looked like we were going to start out a little flat, but if you look at this closely, you'll see we were making lower highs each time, and that's a good sign that prices are probably going to break lower. Doesn't mean we'll have a big trend like this, but it just means there's a very strong probability that prices will break lower because every time they tried to rally, they made a lower high. And so the buyers are losing steam and the sellers are gaining steam. So that's basically what you can read from that little flat area that's making lower highs and lower lows down through there. And then eventually we break off and it turns out to be a heck of a down day. Basically, this was a 100-point sell-off day, and you just don't get many days like that. So this was the kind of day where you ought to be able to get you a couple of quick shorts and maybe a runner or two and be done really early. And I know I was done very early today, so just one of those kind of days. We should do this every day, either up or down or whichever way it's going to go, because it would make it a whole lot easier trading. But either way, you can see the big downtrend. I played it as a spiking channel, as a two-tiered channel, but there's lots of other smaller term trends in here that you could play as well, and they came in handy. But let's back out. We'll talk. There's quite a few trades, so I'm going to back out and get to talking about them, and then we'll wrap today up. But there's so many of them, I don't want to waste a lot of time. I want to kind of get to it so we got a chance to get through them all. But as you can see, we were going sideways when I came in, and you had to be a little patient. It was, almost 8 o'clock before you got a trade today. Still was before the regular open, but notice how we're working down, and really you could probably get a trend right here, but I didn't play that downtrend because it's more sideways action, but there he is. If you really put it in here, there's a little bit of a trend in here, and you can see that. And this is off the trend line, but the most important thing is that we broke lower and you pull back. There's a new high here, so there's a failed second entry long. First of all, notice that new high. You're moving down, then you get a first entry, a little correction, second entry, and it turns down again. So that's a failed second entry long. And even though it didn't break lower here, that's still a two-legged correction, back to the trend line, back to the EMA, back to test the breakout area. Lots of reasons to like this to the downside, but there's a little bit of a trend working up. It's not a lot of one there. There's a little bit of sideways action, but it's two legs back to the trend line, back to the EMA, and back to test a breakout point. And there's a hidden second entry in there, even though we didn't break lower. If you went to a smaller chart, you would see two clear legs up, and that's a nice bearish bar. Just go short right there. That's a quick, easy trade right out of the gate. And then we make a new low, and then we start back up, and we get another second entry right here. The only reason this one's green is that it's not a perfect, it's not a really negative bar. It's more bearish than it is neutral, but it's almost a neutral bar. It looks a little like a doji. It's not quite a doji because it didn't close dead center. So, and we're a little ways away from the EMA. It's a second entry. If you draw that trend line up, you get a close outside, move to a new high. It's two equal legs up. And so if you want to be a little bit, aggressive, that's a good one to take. And sometimes that'll be the center of a pattern. So at that point, I would have at least looked for a move down here, and then maybe look for a repeat of that at a minimum. And you can see that takes you down to this level right here. And so that's a great place to look for a center of the pattern, another chance to go short. And you can see we've moved down, and that measured move was right about down to this this congestion area here, a little tight range, basically. Congestion, tight range. All congestion is a smaller range. It only amounts to a few bars or whatever. So, but this is close enough. You can count that as a range, so to speak. But there's a little higher low right here. We didn't break higher, but we tried to go higher a couple of different times. And you do have a little trend line working down there. So I like that one's a higher low just to go short. I would have liked it better if it broke higher, but I think it's still a valid trade. And there's a couple more that were right off that trend line. But the further you get away from the EMA and the longer it's been, the more dangerous that becomes. So I think you're better off just to wait until you get another correction of some kind. And we do continue to move down that trend line until we got a measured move, and then we just kind of went sideways. And notice that we're going sideways here, and then we drop out of that little range. There's really not a good opportunity to enter this range. You might have considered a long right there, but I think that's dangerous. We did have a measured move down, and we are going sideways, and that's a chance to get long at the very low of a range with plenty of room back to the EMA. So you might consider that. I'm not going to mark it because it's been all downhill, and it's just a little bit too aggressive to try to pick bottoms. You're going to get burned with that. You're better off to wait on a higher low, and you never get a higher low. That trade there would have worked to the upside, but it's just too risky in my opinion. And then notice we drop down and we go back into another range, and then we finally get a little small bearish bar. And what I did was I drew a trend line off of these lows right here, and I drug it back up to the high. And believe it or not, that's exactly where this turns down. And it's a lower high. We broke higher there, a little tiny bar. We don't get many of those lately. Enough room to get out before this double bottom. So I like going short right there. And that is another quick, easy scalp down to the lower side. And then look what happens. You make a new low. First entry short, second entry short. And you get a nice second entry short there. And really, this trend line is a continuation from here. I ended up just redrawing it from here. It's like a little spiking channel, but it's really just a continuation from the morning. Even though we had that break here, it didn't really matter. I also drew a shorter term trend line that's a little steeper. There's one here, and then I drew another one here, like I said, because I drew it off these lows first and drug it up. And we're coming off the EMA, this trend line, and the support from the congestion area. And you got a really small bar. It's a lower high from this high. So I like that one just for a quick scalp. You could have ended up getting a runner out of that. Actually, we already talked about that when we were back over here. And you got another second entry, regular, nice bearish bar, opens on its, basically its high almost and closes on its low. And notice that's a new low, so that's the first entry, second entry. Again, right here at the EMA, right where that trend line would have been if you drug it up. Originally I had it a little lower, but I ended up, it's still the same thing. That would have been your first close outside, so I still would have liked it, but I ended up adjusting it later because it fit better. And then of course you get your failed second entry long here, and you got to be a little concerned about this one because it's right at the low. Okay, I'm sorry, I had a little interruption there, but it's a failed second entry long. You got to go short at the lows, but it did break higher first on the second entry and fail and turn and go out the other side. And I generally like those, especially when this is looking like a spiking channel and it's coming off this trend line here. And then I also drew that shorter term trend line in there that confirms it. So I like that one, hoping that maybe we're going to this other side. And that's where we ended up going. We ended up coming back again before we did. But at this point, you're probably just hoping it comes to this other side. You don't really know you got this second level down here. So at this point, you're just wanting to ride this on down to this lower side right here where I originally got that trend line from. When it ends up going much through there and we go lower again, then you got to be concerned that maybe there's a two-tier channel there. So. But that turns out to be a pretty nice trade. It moves on down. You get another little turn down right here, but now you got 4 bars stacked up. It's right at the low. It's a little bit risky. It turns out it bounces here, and then watch what happens. You come back, you get a lower high right off that trend line again. This is a second entry short. Nice bearish bar. That's a perfect setup. It comes back again and gives you that little repeat pattern. It looks a lot like that one. It looks a lot like another one we had up here. Can't remember where it was, but there's another one up here. It looks a lot like a repeat pattern, and you'll see this one multiple times where you get a chance to go short right at the previous low, but because it's such a strong downtrend and the fact that it's a failed second entry long, I just think you're better off to go ahead and take that. And this thing rockets on down. You get another little pickup right here, but a lot of congestion, and it is bouncing right off that lower trend line. So it may not be, this could have been an overshoot. So you got to be a little careful at that point. But it takes on off. I'd probably hold these runners if you had runners off these. And of course, once it starts going lower, just find your measured distance between these two over to here, and that's where I would look to probably exit. And then from there, we just kind of go sideways. There is a second entry long here, counting off that high, and a little failed break lower. But again, I wouldn't be trying to pick bottoms yet. So I think you're better off just to wait and see if you get any shorts off the high. I'd stick to the shorts. And then you finally get a little small bar right here that gives you a double top right at the highs of this trading range working across here. So you got plenty of room to get out. It comes back, and then it turns down right off the main trend line and gives you another short right at the high with a small bar. And again, it's not a perfect, but it's more bearish than it is neutral. And the thing I really like is it's a small bar that turns down right off the trend line and gives you a chance to go short here. And you don't know that it's going to take off like this, but this turns out to be a really great trade. And it just takes off, and it just continues to go lower. Here's that little break higher and turn down again right at the lows. You could have considered that one, but I think you need it to be a failed second entry long first. So that comes here, and it does confirm that trend line, but we're a good bit away from the EMA. If we're going to get a measured move down to this lower side, or not necessarily a measured move, but if we're going to move to the other side of the channel, you still got room there. But that was a little risky. I marked it green because it's worked all day, so you might consider it, and it would have worked, but it's a little bit aggressive. Then we get a close outside, another overshoot, and then we're reversing and going the other way. There is a failed second entry short right here, and at this point you would hope that we're going to the other side of the channel, but again, I just think it's a little bit risky to be going long at this point. Everything has been working down, and so you could get burned here. So just kind of wait and notice what happens. It comes back, and then you get a first entry long there, a second entry long there. Actually, there's a first entry long right here. It ticks higher a little bit there. It ticks higher a little bit there, but I wouldn't want to be going short with all those matching bars across there. Probably this one would have worked if you'd have taken it. It still had room, but it's right off that midline, and we've had an overshoot here, and you kind of going sideways, and that is a doji there. You got stems on both sides. It's just not a very good looking setup. It would have worked, but I didn't mark that one. Again, it's one of those little ticks up, but it didn't turn and go out the other side there. It didn't give you a very bearish bar. In fact, that bar is more bullish than it is actually neutral. It closed in its upper side. Of course, it doesn't matter on a trap a lot of times, but I just don't think you're going to trap a lot of people there to the wrong side. So I think you're better off just to wait and notice how it goes sideways. And then it gives you another turn down right here. And this bar is not real bearish either, but notice how we made a double top. And if you draw this trend line off these lows right here and drag it up, it's turning down right off that. It's right off the EMA. And so I liked that one just simply because I figure as hard as this downtrend's been, we're probably going to make a new low here. The odds are very high. And to try to go higher that many times, and notice even though this is basically this low is just a tick lower than that one, and then this one's a tick lower than that one, and I went back and forth whether or not to really make this one green, but at this point I would look for a minimum. I really think you're going to get a minimum of a measured move. And if you measure that first move, move it over, and you can see we maybe missed a perfect measured move by a tick or so there. So that would be the other thing that I liked about that one. And then this is a new swing high, so first entry, pull back second entry, and another real bearish bar. And so I like going short again there. And of course we did reverse after that. And again, you got to be real careful about reversing. You might have taken this trade right here, and let me explain, let me show you. Notice you get a first entry and you get a second entry right there, but you don't want to be going long right into that. I would want to see prices at least get back to what looks like a trend line here. And so you get that right here, but I still don't like it because it's looking like a sideways kind of a congestion area. But there is a double test here. We double tested this low and we did make a higher high there. So you might consider that one since it's right off a possible trend line. But again, I think you're better off just to skip this. And you really just never get a good long to get into this move up here. But look what happens. You get a break, move to a new high, you get a lower high here, then you get a failed second entry long, so I like going short right there. And again, it's off to the races to the downside. And you could have gotten a nice little move out of this. You didn't get a long-term runner because it comes back if you move your stop to break even. Depending on how you paid your runner, you probably didn't get a runner here. And then it comes back to the trend line again. I didn't mark this one, but again, I like it because really what you have to consider is this was your trend line at that point. I ended up drawing, and this is where you really consider your downtrend starting. So I drew another line there, and so you didn't really have that at that point, and you weren't back to this trend line, which is off those first two swings, and you just came off the low. So I wasn't crazy about entering there. It would have worked. It ends up the bottom falling out of it, but you don't know that ahead of time. So, but again, I did draw that trend line. You get another one that comes back right here. And really you come back again right here, but I didn't mark any of those. I just don't like those setups. It's getting, it's right around lunchtime. It's getting later in the day, and we're starting to stack up here. We've already had a close outside the new low, so you could get a reversal here anytime. And I think that's what was probably going on here. Some people were trying to think that, hey, we're going to come back about halfway and probably make another leg up, and it just didn't happen. But by sitting tight and just being patient, you get another opportunity. Again, I didn't like this one because we didn't make a new high, but that's a really bearish bar. You really probably wouldn't have got a chance. You would have had to use a limit order here and wait for it to come back, and I don't think I would be willing to do that on a bar that big. But notice what happens. You get that new high, you pull back first entry, and you move down, you pull back second entry, and it's right off that original trend line. So I like going short there. It kind of went sideways a little bit, so you had to tough it out here. If your bar was like mine, you probably weren't able to scalp out. You might have been able to, but you probably wouldn't, depending on how your bar was right here, because there's not a lot of room. But when it comes back again and makes that lower high, go short right there. And then it gives you that little breakout pullback short again with a big bearish bar. And that's been the repeat pattern we saw several times. And notice this, how big that move is. Once we started going lower there, I would look for a possible measured move. And you see we came within a tick or so of that measured move. And so that's what I would have been looking for my target there. It does give you a few more that come back. But by this time, you've been away from the EMA too long, and it's going to bounce soon. And it does bounce right here. And notice you get a failed second entry short right there. And it's a neutral bar, but it doesn't really matter. Notice that low. First entry, you make your second leg up. That's almost two perfect measured legs with a failed second entry short. So I like that one. It's a little bit aggressive considering it's been a downtrend all day. So I marked it green for that reason. And you really just don't get a chance to enter this one or this one. But here you get that reversal pattern again. Notice that there's a lower high here than that, but that's a new high based on one of these other swings over here. So first entry long, second entry long, it fails, and there it is down there again. It's kind of that just before it goes lower, it gives that little failed second entry long, and that's been a repeat pattern all day, so I like that one. And I would have been looking for a measured move again. We had one leg down, so when we start down again, look for another one, and notice we got a little more than that. And then it bounces, but again, it doesn't give you a chance to get in. And what's happening is people are starting to, this thing's been way oversold, so the buyers are starting to come back in, and every time it looks like there's a chance to buy a low or something, that's what's happening. People are coming in, and they're trying to head off this a bottom, and they're trying to pick bottoms basically. But one's coming soon, but they're really hard to pick, and I just don't recommend it. So I don't think you ought to go long there. And that takes you into the 2 o'clock hour. So it got a little bit tougher in the afternoon, really after about 1 o'clock. We're really doing this side stuff up and down. It got a little questionable, and you got to be careful in there. You really only want to take shorts, and we just didn't get very many good shorts, and you got to be real careful on the longs. But you can see that was mostly all downhill today. And again, that was a 100-point move basically. So if you caught a runner or two, you possibly could have caught one that you could manage most of the day. I'm probably not going to hold a runner through a big correction like that right there, which doesn't look that big in the big picture, but that's still a relatively large correction. If you look at the lows there, that's 25.69. Well, the high is 25.88. So that's a relatively large, that's 15 plus point correction there. It just doesn't look like it in the big picture because the overall move was so large today. But this was a really good trading day, and I hope people were able to take advantage of it. Hopefully you weren't pulling the rookie mistake where you're trying to buy the lows all day long, because that's where most people fail. They're used to these days that are sideways, and then where the best play is to buy the lows or sell the highs, but and then all of a sudden it trends and they're trying to buy the lows and they all the way down, and then they finally get up the courage to go short right in here or right in here somewhere, and it bounces on them and they still lose. So that's what generally happens when you don't follow the rules and you don't understand how to read the chart. So I hope that's helpful. And I'm really messing this chart up. Sorry about that, but hit the wrong button there. But you can see it. It's pretty much all downhill. And really, this two-tier channel was just a continuation of this one. I mean, you see you can almost draw those lines together. So, and then this one I just drug up. I copied from these and drug it up. So it's pretty much the same thing. I did want to read one quick email. Let me find it that somebody sent me today that was encouraging. I'm going to pause it and find it. Okay, this trader sent me an email. Basically, he started in Sim, says about 6 months ago, then he went live during the new year. Even though he's having a lot of success, he decided to go back to Sim recently because of all this volatility and the fact that he didn't want to risk the large bars and, risk 12 or 20 ticks. Basically, he says, I don't want to risk 12 to 20 ticks because I don't have that big of an account, and I don't want to lose, start losing my trading capital on just a couple of trades when it's taken me a while to basically have success. But I'll pick up here and read it verbatim after that, because what he says here is just so important, and this is what I try to drive home to everybody. And sometimes people hear it and sometimes they don't, but this gentleman, I obviously listened to what I told him and he did it. But he says, I'm going to read verbatim now. In the last 2 months, I've read and reread your trading manual for the first time, and for the first time, I'm actually seeing traps in real time. I've been trading second entries and pullbacks and strong trends, and I'm amazed at, as you continually say, how much the market repeats itself, just like we talked about repeat patterns today. Had an issue with that at first, with getting in too early, only to be stopped out and then see the market head back in the original direction of my trade. One big thing I've learned is patience. And you'll hear me say that a lot, and you'll hear people in these uh, positive emails say that a lot. Waiting for a good confirmation candle, especially near the EMA, trend lines, and major areas of support and resistance. But patience has been a major turning point in my trading, with learning to sit on my hands and wait for a good entry. My reading of your manual at least once a month has also not only reinforced some things, but made some points a lot clearer to me. Just little bits I pick up during each reading has proved invaluable. And that's one thing I want to comment on right there before I finish reading is I try to tell people this. You cannot read that manual. I don't care what your IQ is. You can't read that manual through once or twice and get everything. And use it like a study manual. Just go back over and over, read a paragraph every day, and do that over and over. And once you get to the end, start over again. Because I promise you, every time you read it, you'll pick up something else. Because some of this stuff builds off of previous things. And so what seemed trivial the first 5 times you read it, suddenly a light snaps or goes off or comes on, and you say, oh, I see what he's talking about there. So you can't read that manual enough. I'm just telling you. Don't think you can read it even 3 or 4 times and get everything, because you just can't. There's no fluff in that manual. Everything is important, and some things build off others. So it's not like you can read a book and get the big picture. You're going to get some bits and pieces, but you're not going to get the big picture just reading through it. So I was really encouraged to read that. That's one reason why he probably had so much success so early, because it's very rare that people can trade, study for 6 months and sim trade and go live and have success. Most people don't. So there's a reason why he was able to do that. In reading his email, I think it's the fact that he understands he needs to be patient, but more important than that, he understands what he needs to do study-wise. He's not just trying to read a manual and start trading in a week or 2. Most people, I'm going to tell you, 99% of people can't do that and won't do that. So this was a really good email, but I'm going to finish it. I'm going to go ahead and finish his last paragraph here. It says, your trading system is a simple but so effective system. By simple, it reminds me of Gall's law. I guess he's telling us what Gall's law is here because he's got it in parentheses, but he says Gall's law is basically a complex system that works and is invariably found to have evolved from a simple system that worked. The inverse proposition also appears to be true. A complex system designed from scratch never works and cannot be made to work. You have to start over, beginning with a simple system. This was a theory by a guy named John Gall, and I guess that's why it's called the Gall's Law. But anyway, he shared that with me, and that's interesting. But he says, I first learned about trading 17 months ago with an academy here in Australia, which taught me pattern trading, ABC patterns with dozens of indicators all over the screen. I soon found out it didn't work, and after much searching, thankfully found yourself. I just thought I'd give you an update on my trading, and thank you for your manual and your daily chart lessons, which are prizes and helped me immensely. Regards, and then he gives his name. So yeah, this was a good success letter. Probably much quicker than most we read about, but I'll tell you, I think part of the reason why is the approach he's taken. He read through the manual constantly. He was sim trading for 6 months. And he was able to put it together a little quicker for that reason, in my opinion. The fact that he's understands you got to be patient at this. But anyway, this is a 30-minute video, and I didn't intend for it to get this long, but I just felt like that was an email I wanted to share. I like to share success stories. We always hear all the negative, and I don't get nearly as many people that succeed contacting you because they're busy trading. And so when I get one, I like to share it. And so hopefully that one was helpful for somebody, but hopefully it's encouraging, if nothing else, for everybody. But anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.